Okay, hello everyone, and welcome to another session of Fintech Firesides. My name is Professor Ishan Srivastav. I'm faculty at the School of Accounting and Financial Services here at Seneca Polytechnic, and also the coordinator for Seneca Fintech. Our intrepid guest today is Jan Christopher Arp, the founding partner at Holt Exchange. Jan, welcome to Seneca Fintech Firesides. I'm afraid you muted, Jan.
We're having mic issues already. I know I'm unmuted this time. We should be good. Thanks for having me.
Awesome. So I'm going to read up a quick bio on Jan, and then we're going to get into the questions as a whole. Now, everyone, please remember that you can post your questions into the chat as well. I will pick the best few and have Jan try to answer them to his abilities. So Jan is a fintech evangelist committed to improving society through the power of finance and technology. He is the founding managing partner and co-founder of the Holt Accelerator, which has invested in over 20 early stage fintechs, both Canadian and international, and has tackled some of the most urgent global issues. He is also the founder of Fintech Cadence, which is a nonprofit that has trained thousands of individuals and led to the creation of 100 plus fintech projects. Prior to launching these initiatives, Jan served as the head of finance at Bus.com, guiding the company from incorporation to Series A, and also worked as the head of finance at District 3, helping 20 early stage teams raise over $15 million. He began his career consulting on billion-dollar investment banking and infrastructure projects in the satellite sector. He holds an MBA from HEC Montreal, a finance degree from the University of Ottawa, and has passed the first two levels of the CFA. Jan was also named the Montreal Ambassador of the Year in 2018 by the Montreal Startup Community Awards. Jan, welcome to the FinTech Firesides. How are you?
Awesome. Well, thanks for that. It was quite a long spiel on me. Hopefully, we didn't put anyone to sleep this early on a Sunday morning with that, but thanks for that.
Awesome. So I'm going to ask you the question that I ask everyone who comes into these. What is FinTech to you?
Yeah, fintech is finance and technology, hence where the name it comes from. So I see it as something that goes back all the way to the sort of late 1800s, right? Where we're talking about the sort of the first telegraphs that were happening, transcontinental, like through Western Union. Western Union was more of a telegraphing organization that obviously shifted to money transfer in this case, right? So it's using that existing system. That was a huge breakthrough in the ability to eventually, very quickly in short order, shortly after, transfer money, these forms of money through a messaging system, which is still in many ways how we do it today. Now the name sort of became post 2008, though, I would say, synonymous with startups, right? When you had the PayPal and the PayPal mafias and a whole rise of new startups that came after that one, shortly thereafter in the US. And so like 2010 and onward, so to speak, especially in the US, the fintech sort of bigger wave came in 2015. Now, that's not to say there was a bunch of other fintechs before. I spoke to a bunch of fintechs, since 2005 in Canada, be like, hey, we're a fintech. Why aren't we classified as such? Eventually, even the banks themselves said, yeah, we're also fintechs. We have finance and we have technology. So at this point, it just depends on who you talk to. I think you need to be careful. Generally speaking, it's supposed to represent, the startup ecosystem. So it's harder for a bank to do that. And it does look sort of funky when a bank's like, we're a fintech. But ultimately is financial technology. So it's about comparing, one financial set of fintech tech stack. So whether that's
Mhm.
linked technology to this new modernized version of technology that's being produced.
That makes sense. Fintech itself is a very loosely defined term. And if we look a little deeper into the term fintech entrepreneur, that becomes even more nebulous. But then you have transitioned from investing banking into fintech investing and acceleration. So, what really inspired you to focus on supporting fintech entrepreneurs?
I mean, for me, it was always just wanting to get in and get to be an entrepreneur, and I thought I needed some professional experience to start. I started in like an area of like more consulting and market intelligence, which was then as our company evolved at the time, it was in the satellite sector called previously it's not called Nova Space. Uh, they were using that intelligence to then support with due diligence, underwriting billion-dollar transactions for the investment banks. And so I started seeing that, better financial transactional side that got me quite excited, but it wasn't quite exactly where I wanted to be. These were very different sort of models. These are large infrastructure style projects and sometimes very government supported in some cases, but there is a big private sector there. I took some time. So I know this is for many of the students that are on the call. That's where I went and did an MBA. And the MBA is for me, going to school or any sort of activity that you do is a time to explore, to learn, and to try new things. And so I spent a lot of that time just trying to engage with entrepreneurs as much as possible. I started volunteering. I started realizing that it's really tech entrepreneurs because there's difference like venture-backed style companies versus any type of entrepreneurs. And you have to figure out what you like. You start figuring out which stage you like to play with. I started giving away just hours volunteering my time until eventually your time is full. You can't volunteer anymore. Like, listen, maybe we could I started bartering with some friends. Actually, one of the guy who started bus.com, we're like, well, I'll give you finance hours if you give me development hours, because he was a development slash designer. He got too busy though at some point. He's like, well, maybe we could just have you join. So that's how I ended up at bus.com for a short stint. But the long story short is the more you're busy and more you're active, more opportunities sort of fall into place real quickly. You get a career. And through that, eventually I started seeing some pain points, which led me to sort of the creation of different nonprofits and the fund that we have today.
Hmm. Hmm. So you have seen the whole spectrum, whether that be in application and variety or in terms of experience as well. So what were the biggest challenges that you faced, particularly when you launched the Holt Exchange? How did you navigate these challenges?
Yeah, so one of the things that we did was not a challenge, which is always funny to discuss, is because those are interesting to hear, was actually surprisingly not necessarily raising money right away. The rationale
Hmm.
being, well, I was fortunate because a fifth generation family office, the Sir Herbert Holt is what it's based upon. This Irish immigrant came over to Canada in 1800s, did very, very well. He was one of the longest serving chairmen of the Royal Bank of Canada, started Hydro-Quebec, et cetera. Anyways, 5 generations later, the great great grandson wants to kind of give back to the ecosystem, entrepreneurial ecosystem, run something, especially out of Montreal, where they're originally set up and where a lot of the family still resides. And so I joined him in this case, and all of a sudden we had, money raised, right? I was trying to
Hmm.
assemble the deck while we're collecting checks. So that doesn't always happen, but it's usually not that simple of a process. But that was a fun thing. The flip side, though, is that all of a sudden now we have to launch. It's 2018. We have cash in, and we got to start looking at deploying, and we haven't set up anything. We haven't set up our own infrastructure, our own processes and playbooks and how we do things. So the goal is I wanted to make sure that it's all about numbers and hitting a large volume of fintech quality applications to increase the odds that we're seeing the best companies out there, to increase the odds that the ones that we invest in are good. And so we had to go from 0 to 100. And so like at first we're like, should we build some of our own systems? So this is a question of build versus buy, and we wanted to have some stuff internally. We built our own application page, and we're going to start collecting data. We're trying to be data minded right from the start. However, you can have an application page all you want, but if no one sees it, it's not good. So we had to quickly scrap that idea, but still got us thinking about how to like what data to collect in that process. So it's not you wasted. We quickly partnered with like one of these application platforms like F6S, and they helped drive some traffic. But that wasn't all
Hmm.
the sources that we went to. We were purchasing lists, right, to target specific companies that we'd want to go after. So there's a ton like PitchBook, Crunchbase, Traction, and they're expensive. So we started, figuring which ones we wanted to use and better targeting, especially for the stage that we were after. And then building like email drip campaigns to do that, which, you're going to get a better response rate when you have money versus when you're asking for money. It's not,
Hmm.
that approach isn't, when you're asking for money is not a great approach. Doing general mass emails is very different when you're looking for applications. And so that was working well. We even had interns, part of that gathering data on these companies at the same time, but as well as doing the outreach and hopping on calls to see if there was fits, and especially companies as we started going through the pipeline to filter. But
Hmm.
it didn't stop. Like we were traveling the world at that point. We're still trying to refine where we thought the best companies are, because our thesis was the best companies for North America. And so at first we thought that could be globally, and we didn't want to close some doors there. So we were traveling. I remember like 100-hour work weeks, nonstop traveling, hitting applications, reviewing applications, meeting companies at all types of events, sponsoring events, trying to make that work. In retrospect, I probably would have stayed more in the North America side of things, because it is
Hmm.
quite challenging for a bunch of different reasons to find other early stage companies to be a fit already into intercontinental business development opportunities and helping them establish. So that was a part of the lessons learned. Anyways, there's a variety of, long story short, we did a whole bunch of, growth tactics. We got over 400 applications in the first year. The next years we were closer to thousands. And we launched our first cohort, and there was such a backlog of good companies that year, that we got a lot of really great companies at that time. 2018, there was actually a lull in the ecosystem for funds raised. It got more competitive in like 2022, or our last years. But so it really worked out for us to identify it. So we had to kind of, what I always say, like build the bridge as you go type of thing. So then we had the next problem of, okay, like how do we pick the top companies? How do we support those companies? How do
Hmm.
we put on a big show event at the end of the year? Anyways, those are all the story questions for another day. But it's building the bridge as you go in that first year, which was a lot of work and a lot of fun.
All right. It's interesting that you say that raising money was the least of your worries because usually that is perhaps the biggest hurdle that any new entrepreneur has to face. So was it something that you have learned out of your own experience that made the journey easier for you, or do you see that this is something actually common across the entrepreneurial spectrum?
Well, raising money is still very difficult. Us getting started was a very different boat because there was a pool of capital available, and I had to make that decision at the time of, do I want to leave
Mm,
Fintech Cadence to join this entity and build up what I thought was the next stage of a capital pipeline, right? So
hmm.
pipeline is a food chain. Fintech Cadence is earlier. It's hoping to cultivate projects as you described, right,
Mm,
into eventually proper companies. And when they become companies, the goal being, I was like, well, this is great. This is the next stage. Hopefully we can pick off companies from the whole exchange and support that early stage ecosystem that's not very well taken care of. So while we did raise money relatively quickly in that first pool of capital, it's all about building omni-channel approaches to capital raising as you go forward. It's a sales game like any other. And so you want to build different ways that you approach and go after. So we continue to raise, decent proportion of money every single year thereafter. So while the first chunk of money was good and it got us 3 years of sort of capital and runway, we still needed to collect checks thereafter to get into what we're almost year 7 now. And I'm doing actually one final raise, and
hmm.
I've had to find different channels to figure out which one works for us. And one thing that I've realized what resonates with our model is some of it being family offices, because we're backed by family offices, and family offices generally like to work together in many different ways. And so I
Mm,
do try to specifically approach them, but you have to find the right ones because every family office is different, just like people, as well as looking for accredited investors. Which I see at least one on this call right now who is one of our accredited investors who invested in us. And we did so through a partner like Front Funder. So we've actually launched our final raise right now through Front Funder to support and because our goal when we realized through time was we grew this advisor base of 600 advisors, but they're like, hey, we want to invest. How do we invest alongside you? I said, hey, well, we'll open up our fund. You're already helping us. Now you could be strategically invested with us.
hmm.
And so therefore your work is adding value to your own potential returns. But we were only a slight anomaly for a bit of time because of a backing, a highly credible family name that already came with some capital to kind of kick us off to like to kickstart our fund essentially.
Mm. That makes sense. That makes sense. So, working closely with so many different fintech founders, what have been the most important lessons that you've seen from them?
I mean, I'm sure there's tons, probably too many to count. I probably could, write a massive blog post or whatever, just on all the learnings, like through this
Hmm.
whole process, especially through the entrepreneurs. You learn a ton through the entrepreneurs, and whether it's, how they approach the market or what makes a good founder. I think one of the areas that I definitely look at more is this idea of the founder themselves and just
Hmm.
understanding who they are, their character, their commitment. Like one specific area is fiduciary duty, right? Do they have
Right.
a duty to the investors that they bring on, right? And that's important. Like, do they see those initial sponsors, the people who back them, the people when they said, "Hey, I trust you," that they took that to heart and said, "Okay, like this isn't just money for me to go ride, and go on a big trip, internationally and
Mm,
have fun. This is money that needs to go back into the business, even though I've
mm,
still been bootstrapped and I deserve that, but I need this for my business, right?" And so what I usually find is there's different levels of people who understand the idea of fiduciary responsibility. There are people that obviously approach it almost like grant money, like thanks for the grant, like we did it, we won the award. Even worse, we won the award, we won this contest. Then you have grant money, which is a little bit more like the government style, providing funding. So there's some reporting that has to go through it. You have people who treat it like equity, which at the very least they should, which is this idea of like, okay, you've given me risk capital, that's money at risk, but I will put it towards the way that we discussed in this particular case, and I'll do my best. You have people who treat the equity investments like debt and personal debt, where they're like, well, I took your money. It's not like if I don't see what we can do can work out, I'll even give it back before we started because the world changed and I don't want to give it. Or we failed here and I'm going to try to make it up to you on the next one. I'm going to hook you
Mm.
up somehow. And so not there's the spectrum of founders, that's the character. And that's like in life anyways, like people
All
are,
right.
and that's actually one of the most underlooked at areas in debt financing, right? When we talk about credit scoring, people don't talk about the credit or like the character of the individual, right?
Mm.
Like we're talking whether it's Game of Thrones and the Lannisters always pay their debts, right? So like that sort of mindset versus others who don't, right? So
Mm.
that one is one that it's hard to find, but by working through them, and lastly, then their commitment. So on that note, they didn't quite find that first angle. Do they give the cash back in this particular case, or do they continue to find a way to persevere and figure it out, right? Because we're backing on the entrepreneurs, noting that sometimes there's a fine line between hustling forever. We call them sometimes like these in the startup world, these cockroaches that just refuse to die but never go anywhere, or can they
Mm.
truly continue to navigate and find and lock on to something that they believe in. And generally, when they have enough expertise in an area,
Mm.
or they're a founder, a repeat founder, you trust a lot in that
Mm.
process. Like, yeah, we initially invested in this future in this direction with this company, but stuff changes, and so you have to really bet on the team in this case.
All right. So qualities like these, they're relatively easy to identify with people you've already worked with for some extended period of time. But what about in a new entrepreneur? How would you identify those? How can a new entrepreneur trying to get into the field show off that they actually have these qualities in them?
That's a great point. Like you're trying to build your name, you're trying to build your
Hmm.
ability. I think I mean, fintech is a hard one in the sense that you want to be able to, you need to be professionalism is very important. Being
Hmm.
being very thoughtful, understanding, experienced, skillful in the specific domain, right? This is not easy stuff to build. And when you're selling to other folks, it's almost like I joke like the consulting approach. Consultants always feel like they're like at least one step ahead of you, and that's how they sell you on a consulting gig type of thing. Like, oh, have this is the latest and greatest. Your head's been down here. We've been studying up here. Allow us to guide you through this complex environment. The startup world is like that but I would argue two steps ahead because not only that, they've built in systems and processes, so they've already built something for which then this new entity, this customer can utilize. So they have to, and being able to do that, you need to
Hmm.
have a very intimate understanding of the pain point and the market conditions and the profile of the people that you're speaking to build, in this case, also that relationship, that trust. Trust is everything, credibility, right? Credibility is one of those things that's hard to build, but it's kind of easy to ruin type of thing. And that's very, very true in
Yep.
fintech world, right? If you don't have good governance procedures, the way that you do business, and then they see it's kind of off, you
Mm.
get kind of blacklisted, and then they don't necessarily want to do business with you in this case. So, yeah, so it's truly understanding a specific area, having good expertise, having a good name, which you can build. You can build your brand in a specific niche. And that's not applicable to any. That's applicable to anything. You can apply this to any industry per se.
Mm.
Um, but yeah, those would probably be some ways, I guess, potentially stand
All
out as
right.
an individual.
Right. So the key is to build it over time. You can't just go into the game and expect to be appreciated for 100% genius that you may demonstrate. It has to be built over time, and you have to show your investors that you actually are willing to return to them what they're investing into you, perhaps more if possible.
Yeah, that one's even longer because in that
Mm.
case, by it's if you're returning capital, it means you've already raised capital, so you have,
Mm.
and that's you, and then you're returning capital usually 10 plus years.
All
You
right.
really need to find a way to establish yourself and who you are in your brand ahead of that, so that you could raise the money, so that you can close the deals in this case.
Mm.
But yeah, it's a long process of building your own brand.
All right. Okay. So moving off from founders into the startup itself, what would be the key ingredients of a successful fintech startup, considering today's market, as volatile as it is?
Like what would make a good startup, right? Like,
Startup, yeah.
I mean, it's like big picture, we look at like four key components to what a good startup could potentially be comprised of, right? So it's the team, the product, the market, financing, right? And so like
Mhm.
then we kind of score of these and we break them and dissect it. And so the team I've already covered a little bit in the beginning, so I don't want to keep hammering that home. There's a lot of different questions that you could be asking in this particular criteria to make that assessment and just score them on, right? But
Mhm.
you could do the same thing for each of those relevant areas. And so for instance, like market, we can unpack that, especially in Canada, which is tough. Canadian market is only so big. It's 40 million plus people.
Mhm.
Generally, when you go to build some sort of company, you want to show, especially a venture business, that you're a $1 billion business. And the challenge is it's hard to be a $1 billion business unless you're across all provinces. And in Canada, there's a lot of power to the provinces, which is
Mhm.
kind of what we're seeing with a lot of the government action right now. It's like, okay, we got to break down trade barriers. Well,
Right.
I mean, I mean, yeah. So that is actually easier said than done because of all the powers the provinces do have, and they want to keep that power. And doing so, that makes, but there's just like slight, I'll show you, like, for instance, in regulatory rules, like around like fundraising, you have to be careful that, like with the Canadian Securities Administration, every province has different slight deviations to similar rules around how you do fundraising. So
Mhm.
this makes it hard when you go fundraising. And sometimes you need, some folks I see like, okay, well, we're going to ignore these particular provinces and we're going to only concentrate on these. Well, you just lost that market then, right?
Right.
And you needed potentially that market. Some will touch it also beyond regulations due to language laws or slight variations in culture in this particular case and what they're looking to adapt, so then you need at least that to get to $1 billion sort of market cap, because otherwise investors aren't going to touch you. They want to see B's in your market potential and then your go-to-market strategy and how you deploy in each of those areas. And again, then like sometimes it's challenging based on geographical, demographic, language, et cetera, reasons why it makes it hard to kind of go after. So okay, so those are challenges if a good company has addressed all these, right? They've found a way to make it work, to find that big enough market share to be able to. They started with a beachhead that was large enough to be able to do it, to enter, and found a way to kind of grow that within market. Do they have like good go to market strategies on how they're going after existing client base? They thought through different ways that are unique for who they're targeting, and do they have a certain level of traction at this point? Traction being customers and sales that really prove the value. So they said it does this, and I can see by the way they're paying for this that they really like it. I can see that the way that the clients are engaging, that they have what we call like product market fit or a
Mhm.
form of it. And just like you could really unpack that longer and longer, but each of those big buckets, as you unpack them further, is going to be a telling story of like how successful, and they may be stronger. Every company is going to have certain areas that they're stronger at. And so that's kind of what they lead with. Maybe it's a team that just got started, but
Mhm.
the founders have wicked experience and they've already solved a similar problem and are redoing this. So that, for instance, the founders at Flinks recently just launched a new venture and they closed 6.5 million within, a couple months. Hush hush round. You can't really get into it, right? Unless they went to their initial investors and backers and they said, "Wow, like it's different enough from your first business. You guys are great. You crushed your first one. Yeah, we're gonna back you, right?" So they had this on that one side of the spectrum for the team that it was really they scored super well, but they haven't and sure there's a market potential, but they don't have traction yet. It hasn't started, right? It's still built on that one. So it depends. Every company is going to have a different thing that they should front run and how they position
Mhm.
themselves when they're pitching their business.
Right. One of the things you've mentioned, okay, so you have team, product, market, and financing, the four focus areas that you use to assess the quality of a startup. Now, focusing on market, mentioned that traction, you look at whether the company already has some traction, and that is a major hurdle for a lot of fintechs or a lot of entrepreneurs, is getting that early traction. What strategies do you think usually work in doing that, in getting them that traction necessary?
So it depends if we're talking, are we B2C? A lot of fintechs, especially in Canada, are more B2B. So maybe we're talking about B2B side of things. That comes back again, obviously, to the professionalism, understanding the pain point, being able to sell to your clientele better than what's out there, and the credibility. So people trust what you have to say. They're going to take that call just to learn. First and foremost, they're like, wow, you know my situation better than me. You're going to help me pull my head out of my cloud. We're going to have a good conversation to talk shop in this particular case. And then yeah, maybe there's an opportunity to fit and sell me something that I wasn't thinking about at the time. And so I think that's key. And then how do you identify those decision makers, right?
Hmm.
Like where are they? Who are they within the organization? There's the user of that particular problem, and then there's the the budget owner, and that could be the same or different people. And so you need to figure out how to navigate that. For those that have been in the business, that founder
Hmm.
might have a founder network fit. So they already have the existing network and can already sell to, which then back to team, that particular criteria, they're stronger there. So they're able to sell and distribute. They already know who they're going to go after. If not,
Hmm.
it's all about referrals. Can they leverage their existing network to meet the person in this particular case? I'll tell you what really doesn't work well in this particular side is mass emails approach and general emails approach, and everyone's still
Hmm.
trying to work through the different chat GPT modules. And I really don't think those hit rates are successful. And I think that's almost wasted effort still.
Hmm.
I get it. Like, sure, if you want to play and you want to invest in that to learn, I just don't think for now in the next couple of years when you need to be selling, I think to me, this is more really trying to think of your funnels and trying to get into a position where you can get that meeting. And sometimes, you got to really spend more time on cleaning your email list and your referral lists up and getting the right person to introduce you.
Hmm.
And then building your brand. Are you going to events? There's a ton of speaking opportunities. Sometimes you got to sponsor them. So we see that with more larger companies who get the PR, who get sponsored by different papers, news groups, etc. For the opportunity for them to kind of stand out in this case. And then when you're on a stage, you look superior in some cases. You look more credible, right? So it's about trying to identify those ways. But that's more on the B2B side. Again, it's every there's a book on like go to market strategies. There's tons of books on it. There's one book. There's tons of strategies. It's about any company we could sit and go, okay, let's find that there's like hundreds you could do. Let's narrow down the top 10. Let's try three, right?
Hmm.
And then let's figure out which ones work. Let's keep one or two and let's burn the others and let's bring in new ones and you keep iterating on that approach.
All right. All right. When we're talking about fintech startups, we know that they don't exist exist as an island. They don't exist in isolation, and sooner or later they will have to interact with larger financial institutions of one form or another. Now we have two types of entrepreneurs. You have one who want to completely revolutionize the market. They want to disrupt the market. They want to build something and scale it up and change the way things are done. And then you have others who want to create something novel and then end up getting swallowed by a large financial institution. When dealing with institutions like these, whether those be banks or regulators, what should the approach be? How should they approach partnerships with such institutions?
Yeah, so we kind of already covered that, so I don't want to,
Hmm.
reduplicate too much, right? It's right. It's really about finding the right contact to be entering, and I think it's about really like hyper targeting that outreach, right? Like, hey, I know that you have this. The better you can already learn, like more listening to truly what their pain point is, uh,
Hmm.
and trying to like, well, we understand you do that in this way, particular way, like, and this leads to these problems. There's a vast array of like solutions out there, like, or in this particular, like a specific solution that really fixes all this kind of stuff, right? And you'll get this sort of lift. So like
Hmm.
that's like part of that's like really building good sales materials, right? Truly understanding, okay, pain gain, right? Like what is the value proposition that
Hmm.
you're selling to that particular organization, and understanding that is this actual strong lift for them? Is it like
Hmm.
3x better? People aren't really going to change their processes for this. I use this number like arbitrarily, like okay, 3x. You want to feel like it's 10x because I know it's very startup speak. Well, what is 10x? You can actually calculate 10x in some cases because sometimes it's
Hmm.
savings in terms of cost, in terms of labor hours. Sometimes you can, show how much you can increase your amount of time so that you can be more proactive, or you can have 10x more sales, etc. So you're trying to figure out. It's not always straightforward, but how to do that. Sometimes it's just like this tedious work that leads to mistakes over and over because it's so manual. And it's like, well, you don't have to focus on this. You're too senior for this. You shouldn't have to be doing this. Your job will be better if you had this solution, right? And
Hmm.
like really explaining that piece to them as well. It makes me think of one of our portfolio companies, Lexalign, that does that. They help with this remote auditing tool, like for simplicity, right? And so what it does is it empowers the banks to blast out these auditing sort of questionnaires that are adaptive to how the individual responds, and it goes to these commercial entities who are banking customers. And so as they fill it in, the bank gets all this data on the processes that they have. Because if though right now fraud is being targeted at those commercial clients, right?
Hmm.
And so now we how do you explain that to the bank that this is super important? Well, that's a combination of a couple things where like the front line understands this is like we're getting hurt here, as in if those commercial entities don't have good processes and money gets transferred away through some phishing scam, et cetera, we're still on the hook. Now we can say, hey, we did everything we could to tell you how to fix this and you didn't.
Hmm.
Going to reduce the fraud, right? On top of that. And the current your existing process, you don't have anything, or you've done some surveys and before, not on a systematic basis, and your response rate is terrible. He's had 100% response rate. Like that's wild. You send out this to 500 customers and 500 people respond, right? Your existing customer engagement, like that's unheard of in terms of
Right.
engagement for a risk capture assessments. And then you can cross the upsell because you better know their processes, et cetera. And so the point is like trying to articulate that through time, being able to communicate, truly live in that world of the person who has that problem. And so that because again, a lot of them they don't want to do it purely on mistakes, but also just, they don't like that. It's a terrible part of their job. They don't want to be. They'd rather be the analyst and how to be correct versus like holding a survey and collecting the data.
Hmm. Hmm. You mentioned running afoul of regulatory bodies. That was one of the major issues that we see. And oftentimes, especially nowadays in such a dynamic and ever-changing regulatory environment, how can we really effectively balance growth while maintaining compliance? I mean, when you look at, say, for example, any company when we are looking at going to market, you have to look at the legality of your solutions and your products. Not only do you see whether it's legally or illegal, you also have to take a perspective and try to figure out what you're doing that is extra legal, that there are no laws about it right now, but there will be eventually in the future. So how do you figure out which direction the laws might take?
That's a good point. I mean, first and foremost, you want to make sure whatever you're building is on side, right? Like there
Hmm.
are existing rules and existing frameworks out there. And that's part of the reason why building in fintech is costly, right? You have to pay for this. I look at one of our companies, Manzel, who built a Sharia compliant financial products.
Hmm.
How they got started is they needed to identify the idea of like how Western style products, financial products could follow and be created and reconstructed in a way that align with certain religious beliefs, right? In
Hmm.
many of that cases, it can have an interest component, right? That being one of the factors. And that's a big deal because a lot of financial products are completely based around this notion of interest, right?
Hmm.
So they needed to figure that out. And once they charted that and they had their legal team, especially in Canada, that was a big deal. And we invested in them ahead of time because we saw other areas of different markets where they had already figured this. So we're like, okay, it's going to be able to happen. So we invested. And then so they had to have that upfront cost. And that's almost like a barrier to entry now to kind of protect
Hmm.
this case, but that's more money. And then you need to be able to be ongoing compliance thereafter and making sure that you're constantly managing it. So that's one piece, is just making sure you're obviously on side from the gate, because again, it comes back to credibility. You could very quickly burn yourself after down the line. No one wants to touch you because you've been offside. I'd say the second piece is there's a world that you're touching on is this gray area.
Hmm.
And the gray area, I think, is an interesting area to operate in. And not everyone likes to admit that because
Hmm.
you don't want to say, they're like, oh, we're completely on side. But there are times when you're like you just described the rules we live in a rules-based place. The rules haven't been defined yet, and so like technology is moving fast and it's constant. Regulators are trying to keep up
Hmm.
with the pace. What I'd suggest in that case is just being aware of, like there's a principles approach to it, and being like, what do you think, how should the world most likely operate? And so like, do you truly believe in your core? Is this the right way to be building it? And therefore, your society and where you are should be building this, right? In this certain
Hmm.
way. And this is a way to also be a thought leader too, right? And so that's like it's like the idea of like already building towards a market that will eventually be regulated. Now, keep in mind, I wouldn't necessarily bet my whole business on that, but if there's
Hmm.
certain strategies around that, because like by the time regulations become in, like if you bet a whole business on open banking and you started this in 2017, open banking is not likely to come here until 2016. You would have lost a lot of money in this meantime before you could capitalize on such. But I do think that's a bit of like, following a moral compass in this particular case,
Mm,
what you think is right for society, and then communicating that, explaining, build a brand around it, like get the word out, and then you will be more of a thought leader because of it. You'd be
mm,
clearly understood what is right for those. And as you put your voice out there, you have timestamp trajectory of the history of what you believe in this particular case, which is risky in itself because if opinions change and it flips to this particular case. And then there's usually a lag of time to fix your stuff too. So in the worst case that, as the becomes black and white and you were on the wrong side, to then to potentially adjust it as well in this case. Uh,
mm,
so yeah, just things to consider because like it's a very interesting area because I feel like a lot of people won't want to touch on that area because no one will ever, like the easy answer is always be on side, right? But if
right.
you're innovating, sometimes regulation hasn't caught up. And
Absolutely.
who's going to push the regulations forward to catch up with their modern times right now?
Mm,
And like the regulators know, like status quo is risky. They have to
mm,
change. And in doing so, if we don't haven't built it, some other nation has built it, and they're
mm,
going to come in and then eat Canada's lunch, right? So therefore, we do need people to take risks in this particular case to be able to
mm.
build for the future infrastructure that we require.
All right. So where a legal framework is lacking, you look towards an ethical framework to guide your actions.
I would say, yeah, like
Hmm.
follow your own moral compass
That is
and
brilliant. That is brilliant. That's a quotable one. Excellent. Okay. So again, when jumping back to raising capital, now when we're talking about fintech as opposed to other tech startups, there must be some differences in raising capital between those. What have you found them to be?
I think that I mean the single biggest one is going to just be the size of the financing round. You're
Hmm,
going to need more capital than you generally think, and it doesn't matter if you're B2B or B2C. Your tech solution generally needs to be a little bit more polished.
hmm,
It's harder to build a system that it's like push it out and be embarrassed, and if it breaks, it's fine because you're dealing with potential, in many cases, regulations around compliance, and you need to have good data structures in behind, and you need to be, it's moving people's money, and that's a big deal, right? So you need to make sure that this is all properly being managed. And so one of that is just having a robust product. If you're selling B2B,
hmm,
B2B is accustomed to a certain level of API integration, a certain level of stability. So sometimes you need to be already approved with certifications, SOC 2 compliant, et cetera, that you have passed these certifications. Some third party has come in and said, yes, they're good. They can manage,
hmm,
systems are set up in the right way that we can trust and we can work with them. Because the other side is, you might have to, yes, you want to sell to the big companies, that's who design, but you might have to sell to smaller entities first to be able to start getting to the bigger ones, and therefore those smaller ones are less profitable. So you're spending a lot of time on these ones that don't drive the needle, but you need to be able to sell a tier 3 bank to get a tier 2 and a tier 2 to eventually get a tier 1 bank, right? So you start moving
hmm,
up, depending on if that's your strategy, right? Like so like like who your initial target customer is. Some of the tactics you do in any startup in the beginning to get started to build a scalable business. Some of the stuff you do is unscalable in the beginning because you just need to get in and build it and prove the function and the product to be able to get to a certain place before you can turn on the kind of more scalable
hmm.
stuff that you need to build in this case. I
Right.
already covered regulations and how deep it is. I won't go in deep, but all to say is you generally need more money. Generally means the financial evaluations are higher because when you raise more money, I mean, you add it to your post money valuation is already higher in this particular case. But
Hmm,
I'd argue that is like the single biggest areas, and therefore you might have more tech debt, so to speak. So therefore you have more tech that you need to maintain, right? When that's more
hmm.
costly, and so every stage it's expensive to potentially build more. It takes more money.
All right. Right. Okay, so I want to build up on the last two questions together. One, you mentioned that gray areas are the greatest place for innovation that we have in fintech, and that should be monetized upon. Um, what are these gray areas exactly where we have opportunities for the greatest fintech growth? And B, how do you raise funds for them?
Um, I
If you're
think
going to operate entirely
firstly,
within a gray area, how
yeah.
should you approach fundraising?
So I want to maybe just clarify. I wouldn't say that the best and only the areas are gray areas. Like I don't
Mm,
necessarily think that. I think again, you might just to reiterate what I was saying. The gray areas. you have to be careful from building a complete business upon, because in doing so, if it shifts the wrong way and you can't, it's harder to figure that back out and backtrack out of it, your whole business could be out of business because your business model doesn't work anymore. The
Hmm.
gray areas for me were this idea around potential strategies that you could implement to build your business around in some cases. Now, that said, some people certainly operate in those areas and adjust. Like, I'll get, yeah. So I don't think you should build an entire business in a gray area. I think that's sort of risky because you're putting yourself at the if you've built, unless you truly see that there's a regulatory area, like you're deep into it, you've been lobbying for years, every different government body is on the same aspect that this will happen, then
Hmm.
you can be good. Like, look at open banking in this particular
Hmm.
case. It will take a shape or form at some point. So the liberals were pushing something, the conservatives just recently came out and said, we like it, but we're going to
Yeah.
adjust it, and we're going to put it out faster than the liberals ever did. The point is, I don't see anyone saying no to open banking at this point, right? So
Hmm.
that, and because you look at the other nations, there's like close to 100 nations, but less than that, like a bunch of nations that are like moving towards some form of open banking framework. We're behind at this point. So the point being, that one's coming. But if you bet your whole business on timing in a specific function, it could be really challenging. Can you get started by
Hmm.
doing something ahead of time? So Flinks was a company that was at the center of it for the idea of screen scraping, right? But they actually encouraged open banking. They said, well, can we not, like, we could be the screen scraper API connectivity, but through time,
Hmm.
once you have proper rails in place, we could still be that central body to support and with the API connectivity in this particular
Right. Right.
scene, supporting the startups and maybe so they were actually pro in this case. I look at fundraising as an example of that. There are gray areas. There's gray areas, for instance, for us when we did our own fundraising. We had to, we opted to try a crowdfunding campaigns. We had lawyers review specific stuff, and we understood that with a legal opinion that we can use crowdfunding for our particular use case. Now, I look at an organization whose whole sole job is around crowdfunding and it being more encouraged. It's Front Funder. So we
Hmm.
used Front Funder in this particular case to support them. That said, they do offer other ways of fundraising on behalf of startups. They have an EMD license in this case. So they do have licensed dealers who can offer it. So they still operate in the frameworks that are available, that are required by law. They saw new regulations that are out there. And then, they try to be very careful on what we mean by that gray area. The gray area is that in our particular case, when we looked at all the rulings, we could raise money as a fund, but it wasn't like crystal clear. Like, there was no
Hmm.
precedent. No one's ever done it. And when you work with regulators, I can go to them and say, like, can I raise money, yes or no, as a fund? They're not going to tell you that. They're going to say, well, you can look at these definitions. Then you do your best to abide by all that's there, and you get legal opinions to review it. And here's the catch: if at the end of the day you do it and you took that risk and you studied it hard and you interpreted it the best you could and you got all these other opinions on it, and eventually they come back and say, actually, no, that's not on side, right?
Hmm.
Then you're stuck. And so that's the
Right.
risk that a lot of startups take. So that's why you don't want to necessarily build your business on, but that's a bit of the challenge. It's like filing your taxes. It's like, here's a big rule book of everything you're supposed to know, and you're supposed to know how much you owe us. And so you do, and then you bring in all these auditors and questions and you fill it in. But every now and then they could have a different interpretation of something, and that's why the books get longer and longer every year, right?
Hmm.
Very long-winded, but I'm not sure if I'm addressing directly on your
No, no,
point.
you absolutely are, and you actually raised a major point here. Now, when we talk about a lot of in rising technologies, we talk about things like AI, blockchain, or open banking. You mentioned that in terms of open banking, if you think about it, the global south is far ahead of the global north in terms of adoption of open banking, and that is somewhere where we are far behind, and we need to catch up on. But then that's the thing. Open banking, AI, blockchain, terms like these have been in the consciousness of the fintech ecosystem for almost a decade now, but they're just sort of entering the general public's mindset at the moment. So, do you think that disparity might be an issue?
No, it's a huge issue. I first and foremost, I don't think most of our society understands what open banking is.
Mm,
And then so everyone's like, we need a rebrand. Let's call it consumer directed financing. Like, what does that mean? Like, no one really knows what any of this means. Like, it's just not catchy. It's
mm,
like, it's your data, right? And it's not
mm,
just finance, right? It's your data. It's the protection of your data, right? Like
Mm,
that, maybe that's what they should just call it, protecting your data, right? Like it's the ability for you to choose how your data is used, who gets it, the ability to delete that data if you don't like it, the ability to be rewarded because people are making a ton of money off it in the back end ground of it. Like, why aren't you rewarded? Then because it gets complicated. Well, I took the data and then I created models off it. Who
mm,
owns it then? Well, I use your data to do it, but my model is separate, right? So like it
mm,
gets to live on a layer higher than that. But I couldn't have done it without your data.
mm,
And I never got rewarded in the first place. So this is like these are tons of questions that need to be asked. And then obviously there's levels to it. Can I just read the ability to read so I can build models? Can I, write? Can I push payments in
mm,
this way, right? Which is a big deal, much more opens up a lot more risk in this
mm,
particular case. So, but there's a bunch of frameworks in place that already exist around the world let's prove it. So the biggest problem though, again, is if I were to ask anyone out of fintech about open banking or like their question on data rights, the data right question is more fun. I think people start to be like, wow, like I didn't think of it this way. I think it's been
mm.
too much jargon around it. It's been too bogged down. And I think that's
All right.
unfortunate. I think, when I look, you talk to like the three technologies, we're gonna keep blending together.
Mm-hmm.
AI is the engine, right? It's not going anywhere. We're gonna see more and more of this, co-pilot supporting you, builds whatever you do. Like we saw this since 2018, which is why we invested in data structures and the ability to extract data information and set our data structures up. And I actually find the more you actually try to do AI within your organization, it forces you learn a ton. You learn a ton about what your systems are capable, what data you're short on, and what you could already get insights and how you can potentially get more insights and where far you can take it. So it always is
Mm,
a valuable experience. So the AI being the engine, blockchain is more like the storage vessel.
mm,
And so how it's going to be put in what sort of like this opens area where the governance of it is different, right? There's no central body, right? It's everything's time set. And so this is beautiful. So it's still about identifying the use cases. And open banking is a bit of like the rules around how this should operate, right? Like making sure that the data is being flown, like the ability to delete it on certain aspects, the ability to push it into the right engines that I want, et cetera, right? So they merge together. In my mind, every startup is using AI already, like whether you're just doing a simple chat GPT to and completely embedded into chat systems, et cetera. Blockchain is still a question on whether you need it, right? So different use cases, like it's a database, like then is this the particular database super important? We've invested in some that are truly revolutionary. Nearest protocol just launched. This is a fascinating thing. If you guys want to take a look, basically it's a system that your any device, whether it's your and your phone or your computer, they have these sort of validator nodes. They're all talking to each other. They're storing metadata like performance data onto this chain. So that's immutable. It's timestamped. Your data's on
mm-hmm.
this encrypted data is on there, and it's like, wait a minute, is there anything funky about when we spoke to each other? We had a transaction, we had a conversation. Did you seem off? Were you off in this? Because if you are, there's something wrong with you, and you're no longer in a trusted state. Let's freeze you out for a second. Let's correct it. Let's sober you up here. Let's make sure that you're in the right,
Mm-hmm.
power reboot. So if you have a lot of devices, so now you can also say if you have a big IoT device, like if anyone's acting maliciously, or in other cases, is my data from a trusted source?
Mm,
So in a world where Nearest protocol where we need our data, we need to validate that all the data came from a trusted source. Maybe this particular use case is one for which blockchain will be the thing that we need to have, right? So in this world, yes, any AI use case will require a blockchain a piece
mm-hmm.
using Nearest protocol, right? And some believe, and some believe that like the idea of tokenization is the future, right?
Mm,
There's a really good Simon Taylor. He talks about like how this wave that's coming. So it's not going anywhere. So it's important to study up on these key technologies that are impacting, fighting certainly at the finance area, because the
mm,
data that you have, the finance is all data. It's who you are, right? I'm transacting. That's a good indication of who you are, where I put my money, right? Where I put my money is where you put your mouth type of thing is like, is that kind of define who you are? In many cases, yes.
Awesome, awesome. Okay, so it is 10:50 by my clock. I'm going to open up the floor for any of our participants to ask questions from Jan. If you do have a question, please type it up in the chat and I'm going to ask them. We have one question from Sumaya. She's asking, what emerging trends in fintech do you find the most promising, and how is the Holt Exchange positioning itself to capitalize on these trends?
Um, there's always like fintech first and foremost, like we're a generalist, so there's no easy answer on that. So I guess if you're asking us specifically, I'm definitely interested myself personally on kind of the big things that impact Canada because I believe by having Canada's short on risk capital, and so by solving for things for which can support the growth in risk capital in Canada and support some of the major industries in Canada, we're more likely to create grow GDP per capita. So like this is my inherent thesis and belief. And in doing so, I think the capital is going to flow and it's going to solve the problems. We're going to unlock more entrepreneurs because we build more capital, more will be available, readily available for them to build. And that is then building on banking. Banking is 8% of Canada's GDP, which is way higher than the typical average of developed world countries. I think they're at like 5.8 or 6%, right? So Canada's way higher when banking. We are one of the biggest insurance premiums receiver in the world. So Canada has a lot of insurance companies. We're eighth in terms of insurance premiums in the world globally versus like 10th for GDP. So we're two spots ahead. So we collect a lot. We look at wealth management, capital markets, right? Like we have some of the biggest pension companies in the world. We have a ton of family office. So that's a flow of money, right? So building these systems. And speaking for myself, I've seen also like we're trying to build data-driven systems, and a lot of times in capital markets, they don't necessarily invest. There's a whole bunch of opportunity to invest a lot into new systems there, and we've built our own systems to support art. I think there's a lot more to do. Like when I look at all the different ways and tools that you can and move it. So I mean that's one, and then it's the integration with other, that those are more verticals, but like specific technology, like we touched on AI. Every one of our companies, we took advantage of the ability to look at. Um, there was a lot of financing available for companies in AI, and so because we were a prominent, well-received, credible accelerator, we don't like to call ourselves because we're truly a private fund first and foremost. There are very few private funds in Canada. A lot of everything has been government backed. So I think it's an important distinction because we had to go and get private funding to be able to run this and make our business model work also, which is very important. So we're very efficient. But I'd say that we were able to receive this capital, which we went and reached out to a bunch of our startups. And I think they all had to be Canadian based, and of our Canadian ones that were relevant, I'd say about 2/3 accepted the funding, applied for funding, and everyone who applied got it because that's how good they are. And then another portion, so of the third, there's another half of that third in this case who are still considering it. We went to each one of them and said, okay, like, if you had grant money, would you advance your AI development roadmaps at this point? And they're like, yeah, like, well, sure, let's do it. And so I got to work with them and unpack it further because the AI component has just moved substantially. Now some had passed and they're like, listen, we have our customers, we are crushing it with them right now. We don't want to waste time with anything but sales. I'm not going to argue that. I'm like, fine, like there's nothing better than selling to your customers, and that it's great, but I'm going to ask you every year because what I find as a tech investor, when I've seen this before with other businesses that I have built, when you build your tech stack and you have really strong, deep tech intertwined, you can increase your potential valuation because basically that tech is a bit of a moat. It enables you to get some cost efficiencies, generally speaking. It potentially gives you the ability to sell more because like this AI system, it's cheap, it can be cheaper to run. Like let's ignore like the server costs, but like and maintenance behind it. But at scale, it certainly can add to more revenues. And ultimately, that's how your multiples. That's how we value a company. So can this company then raise at a 6 or 8x, or can it raise at a 10, 12, 15x multiple on tops of revenues? That AI component can certainly do that. So that's a bit of a game of, well, can you just, the multiples based on revenues, could you just triple down on your revenues and grow that? That's great. or can you increase your multiple by incorporating AI? So these are questions that we're asking, but the short is that every startup, every fintech has good data, rich data, and so they should all be considering the underlying technology under that, and so that in many cases is advancing AI.
Hmm. We have another question from Sumaya. Two-parter again. What common mistakes do fintech startups make when pitching to investors other than mass emails, like you mentioned before? And what makes a pitch stand out in your mind?
Um, I remember I tried to write some posts on this stuff, or at least I've covered this in pitching. I mean, there's just there's a whole lack of stuff. I think again, if I go back to like, the four buckets, right? Because to me, it's about identifying flags. And so, okay, like let's just look at the team component. Are they not, are they over aggressively selling versus like if I'm asking a question on their, I'm trying to see the conceptually, does this make sense? Like, will a client actually use this? And then they're overselling, and that's a fine line, right? Where they're not necessarily taking that feedback. They're very defensive of their baby, their project, and therefore, I'm more, and because in some cases I have good expertise. I've seen this business before. I've seen these type of customers before, and so when I've asked a very specific, that's been well thought and well grounded, and their response is more overselling versus understanding that and then trying to respond properly or go out and address and correct that. That's a bit of a flag. So it's tough because it's a fine line between obviously you're trying to sell, you're trying to get trying to close, but if that area is an issue, and sometimes it is, and it's like, okay, they're right, they got me there, and then I got to go out and fix this. I got to address this and I got to solve for this versus just assuming that I can get by, I can smoke through on the next one particular case and not take that feedback and not potentially resolve that in this particular case. So that's kind of like one area that comes to mind. We touched on the idea like, yeah, like go to market. It's just like, oh, we just need to close a bank. It's like, especially in Canada, I'm like, okay, like it's hard. It's really, really hard. Canadian banks are not good at adopting technology. And if that's your entire thing, is we just need a bank. Like we just need someone to introduce us. Like it's like, okay, you haven't thought about your go-to-market strategy in any way, shape, or form, right? Like you're not established and set to do so. So I think it's a broad question. There's I could try to I was maybe I could see if like I can find a quick. I'll take a look while we're talking to see if I can find a deck because I had this interesting deck with all these uh flags. Like, and it's any flag. A flag is something that I put up and oh, it's just tough to pass this point. I'm potentially not going to invest. So I'll see if I can
Mm.
find that. So what was the second part to the question?
What makes a pitch stand out?
Again, yeah, we already kind of covered that.
You did, yeah.
Yeah, it's this again, those four buckets, and some things can be hard. So I think it's important that you have a good story, that you identify what your key selling things. You just like look at your business, think of the top 10 things that you have, and make sure that's incorporated. Cover the bases. So like, there's a whole bunch of pitch frameworks out there, and so like, I'm sure you can find a ton that are out there, and you have to assemble it accordingly and get a bunch of feedback, validate it to make sure you're hitting your heavy points, throughout, especially at the start. And that's why I said, like, sometimes you have a team story. So bring that right to the start. You're serial entrepreneurs that have been done this. This is your third foray. Sure,
Hmm.
you're new to fintech. Okay. However, your last one, you're building this profiling technology and you're in ad tech and you know how to get all this great profile data. And so now you're pivoting and you've already identified some beachhead markets for which you have contracts that are signed. So I'm more willing to take an earlier chance on you. But you sold me this team story. You talked about yourself for a minute, and I was sold. I was like, wow, this person really knows how to collect good data that I know the banks are going to need. I've seen this, like they haven't figured out, and the way they built their systems, it's them collecting data. It's outside. They don't have to go into a banking system. They've already validated some of the hard pain points. They realize, no, I'm not going to build a system where give me your data banks. I'm gonna build you something. No, they realize we can get you outside data. We can build you something. And then as you use it and incorporate your data into it, this becomes really rich, right? But you don't have to incorporate it in phase one, right? So so that A being a flag, but B a upsell because this founder with good experience understood the pain point of helping to solve for this.
Okay. We've got another question. Speaking of Canada's fintech ecosystem, how does this compare to global markets? And what are you seeing that's being done to make it more competitive?
Uh, Great question. And before, can I share screen, by
Of
the way?
course, yes, I think you can.
Okay,
Bottom center.
perfect. I'm gonna quit. Hopefully you can see this.
We see it, yes.
Okay, so I don't want to beat this because this was back to the last question. I was able to pull this up relatively quickly, but that's why I mean, for each of these, and you can do this yourself. You can ask, you go through, these are kind of like checklists of things that you could do. These could be, there's a lot more to this too. But it could be like, could be reneging on terms. Like we had a verbal agreement in place, and then all of a sudden you opted to say, well, no, I want more. I'm like, what are you talking about? Like, you already said yes. I've started this path of trying to assess you, right? I've been making introductions to you. We had verbals. And now you're saying, well, I'm like, well, that's how you're going to do business to me. That's how you're going to treat me. That's how you're going to do business with others. I don't necessarily abide by that, right? It's sometimes some businesses aren't venture businesses. That's the idea of the billion-dollar market sizing. Sometimes it's a lifestyle business because it's more of a consulting play. There's more of a human, like it's so dependent on the people versus a product. Like in the beginning, yes, it's going to be dependent on the people, but as it grows, eventually we expect to be processes and systems where if the founder was removed tomorrow, that the business will still sustain because of all the underlying stuff underneath it. So, anyways, there's a whole bunch of stuff here. I'll dive away. As for your point around what we can do, our nation is actually. I had some posts on this recently. Probably back in December, we had fintech drinks from Fintech Cadence, and we talked about this idea of like risk capital. And in Canada is 2 to 4 times proportionately less capital goes into fintechs, and fintechs is more 4 times than it does to our U.S. counterparts. But U.S. is like, okay, how do we become a more U.S. market? Maybe the next best market for financing is Israel. They're like kind of one of the best for like financing their startups, and there's a bunch of reasons why. So I think we can look at both markets, and Israel's a great story because they're smaller. So how do they do it? They have their own differences. Like you have to go through the militaries, and there's a lot of training that goes into it. They're deep in cybersecurity. There's a lot of great research. Like a lot of these are super professional individuals that serve for a bit and then come up with new ideas, and then they have a whole exporting community. So they built something that's tailored to them, and that's kind of what we have to be inspired by in Canada. Like how can we build what's tailored to us? We have our own inherent challenges because where does risk capital come from? So it comes from diverse number of potential parties, right? So one of the single biggest ones that I'll start on is pension companies.
Mm,
Pensions, the money that flows into Canadian businesses. One of the challenges that we have, one of the single biggest challenges is that we are required as Canadians to invest into our pension companies, right? So whether it's CPP or QPP in Quebec. So we have to invest as an employee, and your employer, who's a Canadian business, has to contribute. Now that money goes in, and you don't have control over that. It just goes into this pool, and you'll get a portion back. For those who make a lot of money too, it ends up being a bit of a they're helping bring up the rest of the population in this case, so sort of a social good. So we kind of already have that with OAS, which is another system. So we're kind of a double of this. I digress. I'm not here to discuss that piece. What I am here to say though is if you look at those pensions, they are investing a lot of money into international companies, right?
mm,
So that number, they hold anywhere from 10 to 20%, those pensions, into international entities. The money just kept going down. There was at first they said we think the right level is 40%, and then it just kept dropping to 10 to 20. They're going to argue that, well, Canada is 2 to 3% of GDP, so we should do that, and we're about maximizing returns. First and foremost, I'll say that that's fine, but Canadian people who work in private sector and these Canadian companies are forced to contribute. So if you're saying you can invest, what it does then, it hurts their ability to have more capital at home because that capital has gone internationally and potentially into their competitors. So this is a situation where it doesn't sort of line up. And the whole percentage notion doesn't make a lot of sense. There's a lot of gray listed companies as well that shouldn't be included in that they can't invest anyway. So what is the fair proportion? Some people would argue that number is supposed to be around 40%. So what do we do to fix that? There's a bunch of questions, there's a bunch of answers around that, right? And I have opinions on it. I won't take forever on it. The short is that pensions being one area for which capital can flow into, and you have your corporates, and then you have individuals. In fact, individuals, when they had more control, would invest 75% of their assets into home country. So I'm saying, well, maybe we should look at giving more power to the people, right? Your investments, you should have more choice in where you put it in this particular case. So, well, like all to say is we're why because there isn't enough capital in our own ecosystem right now that's being funded into good Canadian companies.
Awesome, awesome. Okay, our next question is from Nina. She asks, this may be discussed, but I missed it. What are your views on banking as a service, and what challenges can banking as a service face internationally?
Views on banking as a service. Like, I think I have to better understand what you mean by banking as a service. We have like, so for instance, we have invested in a company that's kind of doing what we call banking as a service, banking in a
Hmm.
box. That's what you mean? So like they have a core banking platform that basically allows settlement. The settlement is a big deal, like being able to match between two different ledgers and make it clean, and so that everyone's books are all matched. Super complicated, super expensive process. You're like, oh, it should just match. Money in, money out. But that is a big, expensive process that is challenging to do. And building a good system that can be able to handle that and integrate with other people's books, very, very challenging. We've invested in one particular company that does that. And in doing so, there's a wealth of opportunities available. So their challenge is trying to identify the right use cases to go after. What they're liking to do internationally is a Canadian-based company and support with the underbanked, unbanked communities, leveraging this banking as a service. And so they're going after areas leveraging existing infrastructure. So they'll find a telco, telecommunication provider, who most people have cell phones, so that's huge. And then they'll find a banking partner, and a banking partner who wasn't really touching this market before because it's a smaller, it's unprofitable, you'd have to build infrastructure to do it. They bring them together on their core banking platform and they offer them products. And sometimes they'll bring in another party. They're like, well, we need to underwrite them. And so who can do that? Well, there's a group that specializes in this particular jurisdiction who knows how to properly underwrite. So the purpose of underwriting for the purpose of providing a product, whether that be a loan or insurance, et cetera. And so that, for instance, one of their claim to fame is they got started within the African market because they were offering gig workers the ability, specifically like the equivalent of Uber drivers, to purchase gas in advance, right? Loan, borrowing money to fill their car and then repaying at the end of the shift, microloans, right? And using their system, this used to take days to do. It now takes seconds. They brought the default rate from some absurd amount down by like 100%, like 100x lower, right? Because the default, that's a big thing about loans. Can you get your money back? Like anyone can give money away, getting it back is the other story. And being able to process thousands of loans a day, not hundreds. And so this was a big deal. And they're looking at doing this within Canada, within like the Aboriginal communities. But there's a lot of different areas that you can serve. Like there's a bunch of different demographics that they can bring it to that can make a more profitable, sustainable model, leveraging like within these markets, within the different communities. There's already IT providers and there's also distribution like telco providers. And so finding the right banking partners, grouping those together to service the entire market, right? So leveraging their system and everyone's talking, making sure we have the same ledger. A ledger is very important. We've known this for a very, very long time, thousands of years. They were just important of debits, credits, how important that technology was. And so making sure that everyone has the same page and agrees to it to be able to issue this. So that's a very interesting technology, I think. Is that if that's what you meant by banking as a service?
Sorry, I've been muted. Nina gave the example of Revolut, which essentially is a digital wallet and a payments company. So I think this sort of falls into the same cadence that you were talking about earlier about banks being a part of defining themselves as fintechs. So sort of similar like that. We're talking online banking there.
Yeah, like a neobank. So someone who,
Hmm.
in some cases, some of these folks aren't full banks either. And
Mm.
so to me, like banking is like a construct of a variety of things you need to do. So I need to put money aside into wealth management. I need to borrow money for this, school that Seneca College certificate that I'm doing in this particular case. I have a house and I also need to borrow money for that, but I need insurance to cover all this. I have a family, I need a house and I want to protect in case of a rainy day, blah, 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 right? So you sure go to a bank and they have a full array of different stuff that you can do, but you could do a lot of that stuff now through obviously the wealth of different companies that are available, like these neobanks, if you will. One company that comes to mind is again Menzel, which is well, like this Sharia compliant financial neobank. So it
Mhm.
started with mortgages. That was its claim to fame because I was a identifier beachhead, very profitable market to go after, and they were looking for a lot of folks with these were people with incomes like close to $200,000 per year, have no debt, want to be able to better have afford to get more into the housing market, but there's no financial product that actually meets their need. And so each mortgage per se, like these Sharia compliant mortgages, let's call them, there was a huge demand. They had billions of dollars available. They just needed to get some warehouse funding, which is actually one of the hardest things you need to do is find someone who's going to lend you money. But they said, look at the character of these folks. Like these people, these are high, strong leads. And so once they got started, they actually raised a bit of money, started putting their own money to work. And now they have like 100 million of assets under management. They proved out that like, wow, like their default rate, I think, is zero. Like this is unheard of. Like there's no one in arrears because they have this huge demand that they get to cherry pick the top folks who have in great character, they have no debt, great incomes, all this stuff, right? And so this is completely like pushing them all. But guys, we got to pay more attention over here. But it doesn't stop there. They can chip away at a bunch of other things, wealth management services, right? Like you can offer the way that you do wills. There's like the way you do wills is very different in Sharia law as well, right? So then all your stuff is kind of under one brand, right? One
Mhm.
wallet, if you will. So there is a bit of that. It's hard, but you need to find your beachhead entry point into that one service, right? Like increasingly, you're going to see Wealthsimple is trying to advance more into it, but they got started with one particular thing, which was just investing, right? So you like there are other different products that make up your banking, and that's getting more competitive in Canada. We still have a long way to go. But it's much better than it was 10, 15 years ago, right? Like the bank, but again, the amount of assets that our core banks hold is, still shows that we're very much in an oligopoly market.
We have another question, and this is going to be the second last question that I ask from Rowena. She asks, is there any progress in adopting digital identity prevalently in Canada, where more private sector working with the government to implement it seamlessly with compliance to data security and data privacy policies? So identity management, digital identity management.
Yeah, so there has certainly been improvements. I'm not at the best at the forefront at this point. There's elements like secure key that was something that was a very important aspect for all the banks to incorporate with the government in this particular case. And so you're able, for instance, it is better. Like I look at how we, file taxes now. Like you have an identity that you can log into, and many of it's through your banking credentials. And so they're essentially trusting the bank to verify you, right? So they've already given them a lot of power. So why not have them continue to say, so I have to log in through my bank to be able to log on, right? And so, and that's the idea of like being able to share your data in this particular case. That's like where if links could fit in this particular, right? So this ability to verify specifically who you are. I still think there's a lot more work to be done in this aspect, right? Like I look at all the forms that we have to fill in, and you have to refill in forms, or there's a bunch of information anywhere that needs to be shared that they shouldn't have access to the information. Like I shouldn't have to go if I'm going to a restaurant. I don't get ID'd as much anymore, but if you did, you shouldn't have to show even your birth date, right? You should just say, "Are you able to buy alcohol? Yes or no?"
Mhm.
Right. So that is still very, very far away, right? Like we're not there. We did invest in a digital ID company more in Mexico, and we actually tried to bring him up into Canada, but you're facing a lot of bureaucracy. You're facing some incumbents that have certain ways of doing things and legacy systems, and so it was quite challenging to adopt and build like more of a competitive market, digital marketplace up in Canada, where I think there's others that can put forth the different opportunities to do so. And so like the idea of I know your ID is its own that in itself for the if you're whoever asked that question is a particular vertical that you could study and specialize in, right? If that was something that's super interesting to you, and that there's a lot that goes into that, right? Interesting question. I don't know if that was helpful in providing some context, but yeah.
Certainly it was. Okay, so Jan, this will be the final closing question. It's from Dr. Pakara, and incidentally, it's identical to what I was going to ask as my closing question. What advice would you give to students who want to go into fintech nowadays? I mean, what should for the foundational skills should they focus on? Would you recommend they emphasize on technical skills like coding or data analytics, or is it more important to build a deep understanding of financial markets? How could they position themselves to have the best chance of success?
Yeah, it's definitely an interesting question because it's kind of like having a crystal ball and the world has changed, right? So it's hard to, like look back and say, how I got into it versus others. Um, I think so. First and foremost, I do think regardless, it's important to cover all your bases, right? Like
Mm,
understand. You can almost fill in. We used to build something called the Fintech model canvas. So there's a business model canvas, so the Fintech model canvas for any startup. I was like, sure, it's very similar to the business model canvas. So you need to understand, your customer profiles that you're targeting. So that's like who are the stakeholders in this world of fintech? Like understand them all in the different verticals. Like so understand those components, understand a bit of the problems and solutions that they're utilizing in this case. So you're getting a better understanding of how it flows. And that's complicated when you're talking fintech. Fintech is you're a generalist in this case. So you may want to start with one particular one for which you're already in or you're passionate about. Maybe, if especially within the Canadian market, if that's where you're looking to target, right? Like we already mentioned, so three big ones to focus, whether that's banking, capital markets, or insurance, right? Each of those have their own dynamics, right? Like, and if you're, sometimes it's harder to, if you're in insurance, and sometimes you get stuck in that field and you don't flip over to the other side. It doesn't mean you can't. Just saying like the way things are set up and the way that the general culture is, et cetera, they are actually keep created separately and segregated for a purpose, even for legal reasons. So I think having a good understanding of just the general basics around it, flipping into when we built that fintech canvas, it included things like regulation, right? As an important component, or like key technologies as well that you should potentially look to incorporate. And so like having an aspect of AI, blockchain, and some, et cetera, right? So identifying which ones are the most relevant and trying to potentially study on that. From there, obviously it's hard to say that like I think everyone should be playing, especially if you're younger, with LLMs and AI to a certain extent. Whether or not you want to specialize, like if you want to go down the blockchain, usually I find people who go on blockchain just become blockchain evangelists, and they're like everything has to be blockchain, and then you don't necessarily fit in with the traditional world. So you have to figure out there's kind of still two schools of thought still quite separated. So you have to understand, and if you are, you'll be very avant-garde in a particular industry, but you have to see like whether or not the timing and the mix together will be interesting. Whereas AI is used for both sides, right? So, and that's in short order. Like the amount that you can do with it, you could really blow the hairs back of whatever boss you have. I see like paralegals working with lawyers who are assembling things so quickly because they're leveraging the power of AI. Now you have to make sure you do so in a very compliant fashion.
mm,
So that's also studying like data governance and what's GDPR standards. And so like the ethics around how you build these models in this case, 'cause you can't just take your client's data and put it on the cloud, right? That's a no-no. But how can you use it? And so as you go through that process, and you do it in the right way, I think you will impress a lot of folks, right? That you can do more. Like we're in an age where the more tools you can have at your disposal, the more we are almost like digital people, right? Like where these are extension of like extra fingers that we get to do, the extra systems that you can capitalize upon. And then within that though, it's like identifying what you're passionate about. Like, we went on all those things, but maybe you still like marketing and branding and all that kind of fun stuff too, and the creative aspects. And so figuring out how that can apply into this sphere, right? Like, banks are constantly trying to, improve their brand and be edgy and relevant for that next generation. And generally like where does a lot of cool factor come from? It comes from the younger generation, right? That's the older folks trying to figure that out. They're even watching like kids and teenagers trying to figure out what's cool and what's next, right? Because that kind of trickles all the way up in this case. That's how the story goes. So part of that is finding your passion. So I'd say simplifying is in like cover the basis is, try to play with like the stuff that you think is kind of more futuristic, but truly identify where the things that you're like who you want to be, in 5 years. What is that dream job that you want to be in 5 years that makes sense for you, and then work towards that.
Awesome. Jan, I think that brings us to an end of our discourse today. Thank you so much. This was a very illuminating talk. Would you be averse if our students add you on LinkedIn and grow their network?
Oh, I encourage it. So you got to
Awesome.
keep hustling, everybody. That's the most, that's the entrepreneurial way. Definitely that me.
Perfect. Thank you so much. Everyone, thank you so much for joining in. I hope you had a great time and this was a very informative session for you as well. We will have another session soon. Keep your eyes peeled. Until then, take care, stay safe, and like Jan said, keep hustling.
Okay, take care.